Good morning. Just doing a little bit of a Bitcoin update here as we are getting into the middle of the week and getting nicely through December without breaking down too hard yet. So, big things to look at for today, especially, is we have a late night UTC talk with Powell. That'll definitely give us some kind of direction of what we're thinking for the end of the year and then the next interest rate decision. Other than that, the big things Friday, that's going to be probably the first kind of major data dump. Uh, Non-farm payrolls, unemployment. There's a lot of stuff in the background that's showing that the U.S. labor market's starting to slow quite a bit. So if we don't hit these forecasted marks, definitely something to look for as the 50-50 recession chance is still in place for next year. Yeah, and Michigan consumer sentiment for next week. Yep, big day starts Wednesday with all of the inflation rate data. But by the 11th, I'm assuming we know how the interest rate decision is going to pan out and have an outlook through the end of the year and beginning of 2025. So with that being said, looking at the long short ratios for Bitcoin specifically, one thing to note is that we are back to 50-50, which is nice to see. There are some aggressive shorts in the local structure. However, it's not overwhelmingly so. It's not like we're 60-40 short to long with good funding rates. So still, it's about neutral, but in the local stuff, there's some more aggressive shorting, which means we might get a pop out back up to test the highs. So with that as well, and one thing that worries me is that we are very, very overheated on the funding rates. We're getting back at 0.03, so lots of heavy incentivization to take shorts across the board, and taking longs is very expensive. So keep an eye on that. BitMax, we always look at that. That's the outlier. Very bearish for them as well. So in general, it's looking that direction. On the funding rate heat map side, yeah, we're getting wildly overheated. All of the alts are running right now. So we're seeing that kind of like first shift into altcoins. Bitcoin dominance breaking, all that jazz. So they've been running, they've been performing very, very well. If we have the higher time frame outlook and just kind of look back in the last year, when we started getting these really overheated periods, it's probably where we started running into some more significant resistances. Now, I'm not assuming we're anywhere near as bad as we were back in March when we had the local top that ran into a 7-month long accumulation phase, but we're getting into that area of kind of overheatedness, and it wouldn't be the worst thing if we have kind of like a big flush out back to the downside. So on the liquidity side, it's still looking good. We've been grabbing the local shorts on the way up in the last day or two, or actually literally just the last 24 hours. So we've tagged a lot of the big stuff now. I'd say if we do start failing here, I'd love to see us come back and go lower. The problem starts happening, and I know this sounds counterintuitive, if we do start gaining and closing 4 hours above previous highs, the short liquidity above us looks very attractive, especially at 100K. The problem that we start running into is the potential for a grab of that short liquidity and then a flush right back to the downside. So what I mean by that is effectively this. So one thing that I've been looking at, and a couple of my friends have been saying the same thing, that with all that big liquidity right above 100K, there is a potential chance, getting above 98.9, we are definitely going 100K plus, like this is for sure. The problem is that if the price breaks 100K and then breaks back down and starts failing these levels instantaneously, like, think the Bart Simpson charting pattern, or just a big liquidity grab, like a row candle up that gets sold back and back below levels. Then we talk about a longer consolidation period where we come all the way back down to the lows, retest, probably create new lows down here, and continue running in this flat. So the big question here is there demand for buying Bitcoin at over 100K? Right now, there isn't. That's why we can't get above the level. There is still demand of buying it down in the low 90s. So if we do have a failure, if we do have a pop to the upside and a failure, obviously that's any gain really. If we see a 4-hour close above the weekly open, which is 97.3K, then I would expect that run to happen, actually go up and test the ties. And then there's the big question mark. Are we going to be able to hold price and structure and have that big continuation? I don't think so right now, but we'll see when it happens. That's the big condition for a move up, gain the weekly open, go higher. To the downside, and again, we're kind of in no man's land because we've had the breakdowns, we've had some local failures of structure, and we're not creating higher highs on the 4-hour right now on any attractive measure. If we do have a secondary loss now of the 95K zone, I think we have to run it right back into the lows around 92K. And then we either flush the lows, which makes more sense, right? We do the next little move down into kind of this overlapping demand, and then potentially we have the pop back up. So again, we're a little bit sideways, a little bit out of direction or out of position in that sense of what we're expecting now. So if you're not already, long from these lows that we got, the big higher lows that we were in from last Wednesday, or if you didn't hedge off anything from the weekly open retests, which were basically free money. We talked about this on Monday, right? That bearish retest on the weekly to come back down and create new lows. That was a massive, 3% move, almost, 3.5% move. So I love that. It was easy money. It was quick. But remember, we are still net long in the general position. Alts have been running very well. Dominance is breaking down very well as also. However, funding rates are overdue for a pullback. They're showing that they're overheated, especially on the alt market, which is probably going to get punished at some point before we have a continuation run. It feels like we're back in 2020 and we're getting to like that first kind of like flush out of a distribution. And we'll know this by the end of the week. If we close the weekly out, bearishly again, like we had a down week last week, or in the current week structure, then we're definitely looking at a bit more of like maybe a week or two more of consolidation. And then by mid-December, we're expecting to continue flying to the upside. So we'll see how it all pans out. But for the time being, play the levels and wait for the conditions. Don't jump into this gun. It's completely you're in a range right now, a really tight one based off of closes. Like it's 2%. It's potentially really painful. So wait for a clear break of the demand down here at 95K or a regain of 97.3. That's it. Catch you later.